Welcome to the deep dive. Today we're jumping right into the world of coffee. We're going to try and make sense of the latest market buzz, looking at updates from sources like ZoneCafeFM by Leon Bui, to figure out what's really driving coffee prices.
Absolutely. It's more than just numbers changing on a screen. It's really about connecting the dots, global events, supply, demand, how it all links together.
Okay, so let's unpack this. Starting with today, July 24th, 2025. What are we seeing locally in Vietnam? In the Thanh Nguyen region, the average seems to be around 96,100 dong per kilo, so a bit of an increase.
Yeah, places like Ac Luc, Lamong, GLI, Ac Nong, they're all seeing prices nudge up.
Though I saw some reports mention a slightly different range, maybe 95,300 to 95,700 dong, but with bigger jumps like 3,200 to 3,700 dong increases.
Right, there can be slight variations depending on the source and specific location, but the overall trend is definitely up. And what's fascinating is if you look globally, both London and New York exchanges, they're up again, second day in a row.
Okay, what are the numbers there?
So London Robusta, the September contract, closed at 300 US dollars a ton. That's up 0.33%. And New York Arabica, also September, saw a bigger jump, up 1.69%, hitting 301.35 US cents a pound.
Interesting. But you mentioned something about the November contracts differing.
Yeah, that's right. Robusta's November contract actually dipped slightly, while Arabica's November contract also rose. So maybe some different short-term versus slightly longer-term views there between the two types.
Okay, right. This is where it gets really interesting, isn't it? This constant push and pull on prices. So the main thing pushing prices up right now seems to be
Yeah.
weather worries, Brazil again.
Exactly. Climate Tempo is forecasting a cold front, potential frost even, hitting the coffee areas in Brazil this weekend.
Ah, the classic frost scare. That always gets the market nervous about supply.
It does, but there's a counterforce. You've got quite a bit of supply around, actually.
Okay, how so?
Well, look at the Robusta inventory monitored by IC. It just hit an 11.75-month high, over 6,400 lots. That signals, well, plenty of beans available right now. Plus, you've got new harvests coming online from Brazil itself and Indonesia, too.
And Vietnam's next crop is looking bigger as well.
Forecasts suggest maybe a 7% increase. So all that adds to the supply side pressure, keeping prices from maybe shooting up even higher.
But that's Robusta. What about Arabica? You said that was different.
Completely different picture there. Arabica stocks monitored by ICE have actually dropped to a 3-month low. So tighter supply on the Arabica front.
Got it. And then there's this other factor looming, that potential U.S. tariff on Brazilian coffee, starting August 1st.
Yes, that's a big watch point. A proposed 50% tariff. If that goes ahead, well, it could really reroute trade flows. You might see Brazilian Robusta, which would face the tariff going to the U.S., shift towards Europe instead.
Where Brazilian supply is currently limited, you said.
Exactly. So it could fill a gap there. We're just watching the potential market impact, how it might change where the coffee goes.
So bringing this all together, weather, supply levels, potential tariffs, how does this mess with the actual market structure, like the futures contracts?
Yeah, it's creating some interesting and different signals on the two main exchanges. On the London Robusta market, you're seeing maybe early signs of a structural shift. The price
Wow.
difference between nearby contracts and later ones, it's narrowing.
Which helps people holding inventory.
It does offer some relief, yeah. The cost of holding on to beans isn't quite as steep, but, caution is still the word. That limited flow from Brazil to Europe is a factor, and then there's the EUDR.
Ah, the EU deforestation regulation.
Right.
That adds another layer of complexity for imports into Europe.
It certainly does. Now, contrast that with New York Arabica. There, the price spreads between contracts are actually widening.
Wider spreads, and that's disruptive.
It is.
Yeah.
Because that traditional futures market structure, the one that helps provide liquidity, manage risk, offer financing, it gets distorted when spreads widen like that. It makes planning harder for everyone in the supply chain.
Wow. So it's this really complex dance, isn't it? Weather, global supply, geopolitics like tariffs, and these deep market mechanics all swirling around.
Precisely. It's a constant interplay.
So as you listen to this and maybe think about your daily cup, it's caught up in all these global currents.
And the really big question this raises is, what does this mix of short-term bumps and these longer-term structural changes actually mean for you, the coffee drinker, and for the whole global system going forward? It's definitely something to keep an eye on, how these global forces continue to shape what's in your cup and what it costs.